We actually have news this morning, too, guys, which has not been the case corporate news-wise, at least in the last couple of weeks. I mean, we've had, obviously, at AMC, we've had the move in oil, we've had a number of important things, crypto, but we've even got some M&A this morning with that enormous private deal, but that Blackstone and Hellman and Friedman and Carlyle are doing for Medline, a company that you may not have known, but is an enormous medical supplies company.
People are immediately going to say, uh-oh, it's happening, right?
Yeah, but it's not. I mean, by the way, that deal, 50% is being financed, which is far less than is typical in a LBO. I would just point out. Okay. Remember back in the day, you talk 80% financing, 20% equity check. Here, you're talking about an equity check. The family's rolling in. That could be 13, 14 billion from these three firms combined, one of the largest of all time. So that's sort of more of a reflection of where we are these days.
Oh, I feel.
And they got that QTS deal, which we can get to as well, which is a public company, will be a premium. We'll keep an eye on that stock price. But in my world, a little bit of action today.
More return to normal? Maybe.
Yeah.
And it's not just private equity. We got U.S. Concrete, Vulcan, right? $1 billion deal.
I've been to their headquarters multiple times when Bill Sandbrook ran it. He retired in April of last year. But you talk about wanting to be in the infrastructure situation. I mean, would you really buy a gigantic cement company if you thought that the infrastructure bill was going to fail? Mm-hmm. I mean, this company is the primary beneficiary. It's all just about really kind of roads and they make giant projects like a Toyota factory. But what really matters, or headquarters, what really matters here is the faith that Vulcan has. Remember, there are only two companies, Martin Marietta Materials and Vulcan, and they are going to be the winners.
You talk about infrastructure, this QTS deal, it's data centers.
Wow.
They develop them and then they create them and then they own them. And what's interesting about that deal is we take a look as well at that stock. It's $78 a share, all cash, of course, fairly sizable, $10 billion when you include debt. But what's interesting is the Blackstone entities that are buying it are not the private equity part of the business. It's these perpetual, long-term perpetual capital vehicles. It's Blackstone Real Estate Income Trust and Blackstone Infrastructure Partners. They're not buying it to put it in a private equity fund to eventually sell it or take it public. They're buying it to keep it. Really? And just to have it be a part of the yield that they're going to be providing for their own investors in these open-ended perpetual vehicles. So, again, sort of interesting on that.
They're hyperscale. So if you want to learn what this really means, you have to go to the speech that Jensen Huang gave last week at his annual meeting, which is all about how their chips, their graphical user interface cards, work in hyperscale. This is a co-location. It means how quickly things go. It's one of the smaller companies in this area. But I've got to tell you, when you listen to what NVIDIA has to say, you realize it's all speed and it's all closeness and it's all this notion of just breathtaking, where the speed of light these guys are talking about. And so what happens is that if you're left behind and you don't have one of these and you're trying to do it yourself, you just may not make it.
Shepard Smith here. Thanks for watching CNBC on YouTube.